the market right now is fairly polarized between bigger budget theatrical movies and then much smaller, budgets under maybe $5, $4, $3 million. Quality film with strong elements, there'll be a market for that. But everything else is going to struggle. And I think the market's still adjusting back to, the reality of life after Netflix to some extent. The price you have to pay is going up, and the quality of the talent is maybe not, where you need it to be. What research have they done relative to their film as to what the marketplace is willing to bear in terms of the budget? My name is Adrian Ward, and I'm the Senior Vice President and Division Manager for the Entertainment Industries Division at Pacific Mercantile Bank. We provide production financing for independent film and television projects. It was kind of the right place at the right time. I was attending UCLA in my undergrad and happened to find a part-time job with a man by the name of Lewis Horwitz, who was really the guy that developed the first banking unit in this industry. And I was a part-time employee and then continued to work for him for the next 15 years. So yeah, I couldn't have asked for a better start in what we do. Producers come to us, although it may well be sales agents and attorneys as well, but ultimately a producer who's got a project that he wants to make will approach us either at an early stage, whatever stage it might be, but when they've got collateral for us to lend against, then we can really engage with them and give them an idea of what the financing from our side will look like. So that financing comes in the form of lending against pre-sale contracts of different distribution rights. We can also lend against a variety of different tax incentives, both domestically in the US and internationally. And we're also able to do some gap financing, which is lending a certain amount against the remainder of the unsold distribution rights based on some different criteria. We're having conversations all the time with producers of different, from different walks of life in terms of the early stages, just for them to get an idea of what it takes to get a bank loan, and if they go down that road, what they can do elsewhere with their financing. And we also provide advice to them about hiring different sales agents and maybe structuring a financing that may involve international co-production and that sort of aspect. So we're given our experience of so many transactions over so many years, we're very happy to provide that, just have that conversation and see what their ideas are. When they come to us at a point where they already have some sales, and generally that they're made by a foreign sales agent, we would evaluate the individual distributors that are involved with those contracts and determine their bankability. We have a very extensive database of all the contracts, individual contracts that we've ever lent on going back many years. We also do a lot of due diligence sort of going forward in terms of meeting with buyers from different territories and just to understand what they're going through, because the piece of this that's fairly alien to a lot of banks is that a lot of those distributors you do not see financial statements on them. So you're basing their bankability on previous experience and standing in the marketplace and reputation and that sort of thing. So we spend a lot of time doing that due diligence, but once we can put a value against a certain amount of pre-sales, then that forms the basis of ultimately the loan that we're going to provide. The range of what we do in terms of size is generally, on the production loan, in a production loan situation, we're looking at loans that are anywhere between $1 million and $20 million. We can do more than that. We would bring in a participant bank, but I would say the vast majority of the facilities that we provide in the last 2 or 3 years are probably somewhere in the $3 to $6 million range, and then with the occasional loan that might be 10 to 12 or 15. And what we do is market driven. So, the market right now is fairly polarized between bigger budget theatrical movies and then much smaller, budgets under maybe $5, $4, $3 million. some levels of pre-sales being expected, a tax credit, and some gap. And in our experience at the moment, that might get you around 60, 70, 80% of your budget if you can make a decent amount of pre-sales. So we can do what we do, and then the big question is, who's coming up with that missing 20, 30, 40%? And that's the trickier part, is finding a third-party equity investor. But we, over the years, we've built up relationships with equity providers, and we're happy to maybe make an introduction if we think it's a film that suits some of their criteria. But we generally will ask the producer, okay, assuming we do what we do, what's your plan for the missing money? And hopefully they're already down that road. The way the market is right now, what we generally are looking for is that the buyer, even if they're an established buyer that we know and we like, we always want them to have paid their deposit payment. Typically, buyers are paying 10% or 20% on signing of the contract. So we want to make sure that money is paid, and then we know they've got some skin in the game. And then depending on the bankability of that buyer, we may lend anywhere between 50 to 100% of the balance of that contract, depending on who they are in the territory and their willingness to sign our documentation. You tend to find in those different budget ranges that there are buyers for those types of movies. And again, you've got sales agents that will seek out those better buyers, and so hopefully, more people are selling to the better buyers. They obviously have a finite sort of budget in what they're able to acquire. But obviously it helps everyone when the contracts are with companies that we're used to dealing with and we've got a relationship with. They sign our paperwork, willingly, and obviously overall they have a good payment history. We're lending using an interest rate and a fee. The interest rate is based on U.S. prime rate, which today is 4.25%, and we will add a margin that will be anywhere between 0.5% to 2.5%. And then we would charge a facility fee that maybe is in the range of 1% to 3%. If it's a very small loan that's sort of, a bit below our unofficial minimum, then we might charge a flat fee just because there's a certain amount of work we have to do no matter how much we're lending. But those rates are basically what it is today. And that fee will be somewhere between 3% and 6% in addition to the other fees. We can lay out basic terms that are then going to be subject to them filling in a lot of those missing pieces. So obviously, the sales may be predicated on a certain cast or a director. So at some point, they're going to have to bring those into the deal and get those agreements signed. And then every production loan that we provide on the film side has to have a completion bond. So the bonding company will be the one that tells them all on the production aspect of all the things they have to have it put in place in terms of the agreements with all the main cast and crew and everything. And then we piggyback our documentation for the most part on the back of that. So it's fairly straightforward, and obviously some producers have been through it a few times and others are less experienced. But if you've got a good lawyer working for you as a producer, that will make it a lot more painless. The completion bond is basically an insurance contract that guarantees that the film is going to be will be finished, and it'll be finished according to certain technical standards and within a time frame that is commensurate with the loan that we're making. They're very active in making sure the producer and then the director are keeping on schedule and on budget. We require it because our collateral is based on the ultimate delivery of the film. So if we don't deliver a film, then those buyers don't have to pay under those contracts. So if there's a major problem during production, the bond company will either take over the film and complete it, or they will end up paying off our loan. Gap financing is basically where a lender provides a portion of the budget against no fixed sort of contract. It's basically, a little bit more risky, and that we're lending against the future sales of those whatever unsold distribution rights there are. So we do a lot more analysis on that part of it because of that additional risk, and that starts way back when with the sales agent themselves, and are they a company that we feel comfortable doing gap financing with? But that fills in a piece of the budget that that you don't have pre-sales for, and it's not covered by a tax credit of some description. But the bank's ability to do gap is up to a maximum of about 20% of the budget. And if there's still not enough money after that to complete the financing, then they need to go out and find an investor and put in some equity or some other source of funding. The value of the unsold rights needs to be at least 200% of that gap amount. So in this example, those rights need to be worth at least $2 million. And the reason we do that is that we set the bar a little higher, knowing that if some of those sales come in, 75% or even 50% of what that estimate is, we're still covered. The problem in today's market is that the variation of what those rights could be worth is much more extreme. We've seen some pretty crazy scenarios, but generally we get it right. Going back to being in business with the right sales agent who has made some pre-sales, and then those pre-sales we use as an indicator, relative to the unsold rights, and we look at it that way. It's a very tough marketplace at the moment. The sales side of things, the feedback we're getting both from the buyers and a lot of sales agents is that if you've got a quality film with strong elements, there'll be a market for that. But everything else is going to struggle. And when I say everything else, you're talking about non-theatrical movies with less than recognizable cast, or it's a tough genre like a drama or even a comedy and things like that, that before you could generally expect to find a home internationally and domestically. And now there doesn't seem to be that sub-level of buyers, or as many of them, to pick up those rights. So coming out of the American film market last month, we circled back with a lot of those sales agents, and a number of them were fairly surprised that they've got availabilities still in some key territories, on films that they thought were going to perform, but there's not a market for them at the moment. So there's a lot of challenges in finding active buyers, and before you even get to the point of what's that sale amount going to be, you've got to have a buyer to start with. So the sales market is definitely going through transition. You had for a period of time you had Netflix, some of those other streaming platforms buying a lot of third-party independent movies, and now they seem to have moved more into the TV space. So that's left a bit of a void for a lot of product, and I think the market's still adjusting back to the reality of life after Netflix to some extent. I also, we see a lot of situations where producers are struggling to get that talent that the buyers are looking for, because the talent is also going into the TV business, and the price you have to pay is going up, and the quality of the talent is maybe not where you need it to be. So there are a lot of challenges, but I still see there being opportunities, because overall there's still a need for that content. Certainly globally, there's more and more channels and platforms that need product. But I think the producers have to be a lot smarter in how they put those financial models together. We still see a good volume of producers. Either people approaching us or us going out and marketing. I think what's changed a lot is the speed at which those transactions move forward. It feels like a number of years ago, the deals would come together a lot quicker, and they'd be in production and off they go. Now it seems to take a lot longer for all of those moving parts to come together, and for the producer to be able to kind of finally fix everything and move forward. So, we have a pipeline that we monitor, and the last time I kind of analyzed that, what used to be a couple of months is now more likely 6 to 9 months. in general. I mean, there's always exceptions, but again, all the issues that we talked about in terms of distribution and talent and equity, that all has an effect unless you've got a team around you. But if you're an individual producer and you've got to go deal with all these separate issues, then that's going to take more time. One of the things that as a bank we're having to react to because of the marketplace is that we're generally not putting out as much gap financing as we used to. We used to have a lot more comfort in the sales estimates being valid, and now in many instances we're reducing the amount of gap that we're going to put on the table, which means the producer has to find more financing elsewhere. So that's, as a bank, obviously we're fairly risk averse, and we don't want to be speculating on films where we feel there might be some issue in the marketplace. The main thing that I talk to about producers, at a relatively early stage is what research have they done relative to their film as to what the marketplace is willing to bear in terms of the budget. Too many times we see, good projects that look very good on paper, but with a budget that seems to be very out of line with what the market can bear. So one of my first questions is, if you don't have a sales agent, who are you talking with on the distribution side to get that feedback? I'm always amazed that there aren't more producers going to the film markets, because that's their opportunity to engage with all of those buyers. And even though you may not end up dealing with them directly, it's still good to find out what's the market like in Japan and Germany and the UK, which are critical markets these days for any independent movie, so that they can then take that information and use it when they're constructing a budget. And maybe that goes as far as retooling the film from a certain level of talent to a lesser level of talent, but you're reducing the budget even further, so you're still getting bang for your buck. You've got to be aware of that. You can't make movies in a vacuum anymore. I think, overall, I think it is the everyone's tendency to kick the can down the road when it comes to problems. I can't find an equity guy. Okay, I'll go and focus on getting my bank loan, even though they know that the bank can't fund a loan until they have the equity there. Or on the distribution side, it's like, oh, well, I can't find anybody to, represent the movie, but I'll still go and, engage with talent and agencies, and, you could be spinning your wheels, and it's just a waste of time. So to me, the biggest thing is you've got to confront those problems head on, because when you come to me or other financiers, those are the first questions we're going to ask. And and if I'm super busy with other things, I'm less likely to take on a project if they don't have any kind of clue where that equity is going to come from, because I've got a pile of those deals sitting on my desk already that have been there for 2, 6 months or whatever it is, and they still haven't found the equity. So just in a general sense, it's just, find what the weak points are and try to address them as much as you can.